What if I told you the global financial system just crossed a line that can't be uncrossed? No, it didn't start in America. And no, it didn't begin with China either. It started in a place almost no one expected. Japan. A country that quietly triggered a $20 trillion shock, one so dangerous that analysts now warn your portfolio may have less than 90 days before a forced liquidation wave hits global markets. This isn't a prediction. It is already happening. Japan just broke the world's most fragile financial equation. Low interest rates plus unlimited debt equals infinite stability. That equation is gone, and the fallout is spreading fast. If you think 2008 was bad, you are not ready for what comes next. To understand what Japan just triggered, you need to understand one number: $20 trillion. That is the size of Japan's bond market, the second largest in the world, the backbone of Asian finance, and the silent stabilizer of global liquidity. For decades, Japan controlled this market using one strategy: keep interest rates near zero, print money when needed, buy its own bonds to prevent collapse. This system worked for 30 years. But inflation changed everything. For the first time in a generation, Japan was forced to raise interest rates. Not dramatically, just enough to break the balance. When rates rise, even slightly, the value of old bonds collapses. That collapse wiped out trillions in paper value. And when trillions disappear, investors panic. Foreign banks, pension funds, insurance companies, sovereign wealth funds, all holding Japanese bonds because they were supposed to be risk-free. Suddenly, they're not. And here is the terrifying part. If investors start selling Japanese bonds to avoid losses, Japan cannot stop it. Because stopping it requires printing money. And printing money would make inflation explode. So Japan is trapped. The world's safest market is becoming unsafe. And every country tied to Japan is feeling the shock. The United States, Europe, Asia, global banks, all connected, all exposed. This is why analysts warn of a 90-day liquidity window. If selling accelerates, if panic spreads, if bond values fall faster than banks can adjust, we could see forced liquidations across global markets. The same mechanism that triggered 2008, only bigger and international. Here is the brutal truth. Japan's bond market was the final anchor of global stability. And now, that anchor is slipping. When Japanese yields rise, capital leaves us bonds. Dollar strength weakens. European banks face liquidity gaps. Asian markets panic, and global funds are forced to rebalance at record speed. This creates one outcome: volatility. Not slow, not controlled, but violent. The kind that forces hedge funds to unwind positions. The kind that triggers margin calls across markets. The kind that can erase years of portfolio gains in weeks. And here is what almost no one is talking about. Japan is the world's largest foreign holder of US Treasury debt. If Japan sells treasuries to defend its currency, US interest rates will spike. Mortgage rates will surge. Corporate borrowing costs will explode. And the Federal Reserve will face a nightmare scenario: raise rates and risk recession. Cut rates and fuel inflation. Every path is dangerous. This is why Wall Street is calling Japan the first domino. Because if Japan falls, no country is insulated. Not China, not Europe, not the United States. This isn't a Japan crisis. This is a global debt crisis. Triggered quietly. Triggered mathematically. Triggered inevitably. You are living through the moment when the world's longest financial experiment begins to unwind. Not suddenly, not dramatically, but steadily. Japan didn't start this crisis intentionally. It simply reached the limit first. Now the rest of the world must face the same reality. Debt has consequences. Interest rates cannot stay low forever. And markets that rise for decades must eventually correct. The question isn't whether the shock is coming. The question is whether you'll be prepared when it arrives. This is fiscal history. And this story isn't over.